Shares of Truist Financial higher today. The bank reporting strong earnings before the bell, beating on both the top and the bottom line. Truist Financial Chairman and CEO Kelly King joins us now in a closing bell exclusive. Kelly, very good afternoon to you. Good to see you as always.
Good to see you, Wilfred. Great to be with you.
I wanted to touch, first of all, on what you're seeing on the economy. Clearly, these numbers were good, and you had some similar themes to the other banks. What's your view as to whether the economic recovery is really based on fundamentals or whether there's a risk when stimulus is removed that things could fall quite dramatically?
Well, Wilfred, I really believe it's essentially based on fundamentals. Certainly, there is some demand created by the stimulus. But I've been talking to a lot of business people over the last few months, probably a couple of hundred across our footprint. And I'll tell you, the optimism is really high. They're talking about new projects, new investments they're going to make. Their challenges are around some supply chain issues, and labor shortages and labor prices are substantial. But the overall optimism is very high. That gives me a lot of encouragement in terms of what we're going to see going forward.
What about housing in particular, Kelly? What are you seeing there? And do you think it's a little bubblicious?
Well, Sarah, housing is really hot, as you know. I mean, it's incredible. Part of that is people moving from larger cities to other areas. We're seeing a lot of in-migration into Mid-Atlantic and Southeast, where we're primarily located. And so I think a lot of people maybe had thought about moving, needed to move. Maybe they've added to their family, couldn't move during the pandemic, and now so you've got some pent-up desire to move. So all of that combined has caused a huge increase in demand, and there has not been a huge increase in supply of housing over the last 2 or 3 years. And so it's really hot now. It'll cool down some as we go forward, but I think we're in for a strong housing market for a number of years.
Kelly, this is likely to be your final closing bell appearance, because you're moving to be executive chairman, of course, in the fall, and wanted to actually have some bigger reflections of your view of the banking industry as a whole. And the first question I had on that was, do you feel vindicated by the merger that you executed to create Truist, and how important was it and is it for the long-term future of this company, the scale that it's given you?
Well, thank you for asking, Wilfred. I am really, really excited about where Truist is. Bill Rogers, the CEO of SunTrust, and I came together a couple of years ago. And the reason we did is because we saw the mega trends that were happening in our industry, which were largely around the need for additional scale, to invest in technology, to invest in marketing, to invest in cybersecurity management. And all of those needs have now turned out to be surely justified. And we saw huge scale advantages in terms of combining the two business mixes of our companies. All of that is proving out to be exactly as we thought. So to be very honest, I would humbly say that it's going even better than I would have expected when we announced the merger. And I think we're in a really good position as we go forward.
And you're in the top 10 by assets in the U.S., 7th or 8th, I believe. And do you think any banks smaller than you might struggle in the next 5 to 10 years because of that need for investment in areas like tech? Do you think there'll be a lot more consolidation of banks a bit smaller than you?
Yeah, so we're number 7 now, and I really think that we're about $525 billion. I do believe that institutions that are meaningfully smaller than that are going to face the same challenges we faced. I mean, we were each about $225 billion when we came together, and we felt huge needs to improve in terms of scale. I certainly think smaller firms are going to face facing those same challenges, because the issues that affected us are affecting everybody. Everybody's having to invest more in technology, particularly the smaller institutions that are competing with the very largest national banks. The technology is a scalable concept, but the marketing is huge. So when you're a smaller institution and you're up against in your market a larger institution that simply way outspends you, then perception becomes reality. And we've seen over the last decade a shift towards new accounts being opened by the very largest institutions. And in many cases, in all honesty, it's not because the quality is better at the larger institution. It's because they outmarketed the smaller institution. So what we saw, I think others are going to see and are seeing. I suspect you will see some continued consolidation. And I think that'll be net good for the country and good for the economy.
Kelly, I should have said this is probably your last appearance as CEO. We hope it's not your last appearance on Closing Bell altogether, but we congratulate you on a great tenure, and thank you as always for joining us. It's great to see you.
It's great to see you. Thanks for letting me join you. You know, it's been a pleasure to be a part of such an honorable profession. You all do a great job representing and covering our industry, and anytime I can be helpful, I'm happy to.
Shepard Smith here. Thanks for watching CNBC on YouTube.